So in this session today, we are going to talk about what's happening with global markets, where are they really headed, what's driving prices in global markets at this point of time, and what's really the scenario affecting us around it. Now, this is an interesting topic to discuss purely because this year 2020 is like an unprecedented year because of the virus that has kind of led to virtually a shutdown across the world. Right now, as the world is reopening, obviously, you have numbers which are coming out. We saw the US GDP numbers for the quarter and they were down minus 32%. Of course, these are annualized numbers, but that was a number for the quarter GDP growth that came out. And so make no mistake, the virus had a very, very big impact globally. Employment numbers shrunk, unemployment numbers jumped. There were layoffs across the world. There are continuous layoffs that are happening at various levels. So economically, there is a long, long way to go, right? Yet the markets, on the other hand, first reacted extremely violently in March and then have practically retraced the entire move of March in the months of April, May, June, and July, right? So it took about 4 months to retrace all of it, what the markets have done in the past. Now, there are different theories that play out around this, and it's interesting to see which of those theories is correct. Nobody really knows, it's only in hindsight after a point where we will be able to figure out whether we were correct in terms of our assessment of was it a bull market, was it a bear market. That's something that will come out over a period of time. As we stand right now, it just seems like markets have retraced a large part of what they had given up, and some stocks and some segments or some sectors have actually gone beyond as well. So that's even more interesting to see what kind of sectors have started emerging as leaders after this entire crisis kind of came up, right? Let's understand what's happening, right? Global markets have been on an up move. Cases of coronavirus remain high, though it seems like severity of the cases has reduced a little bit. India cases continue to rise as we kind of unlock the economy. It's expected, nothing that is unexpected on these lines that is happening. Global markets seem to be following a certain kind of a pattern in terms of first dipping, then every time there is a sort of a problem that happens with markets, there is some or the other government announcement coming across the world. So that's something that is that seems to be playing out. In terms of sectoral allocations, two sectors that have been very, very big beneficiaries are technology and healthcare globally, right? If some of you track Indian pharma companies or the Nifty Pharma Index, NSE Pharma Index, you'll get a sense of what I'm talking about with respect to how much the movement has been in the healthcare segment. Similarly, for tech companies, the larger tech companies, because there's a new world order where everyone is basically going to kind of look at work from home. People are going to use technology significantly. Some business models have been changed forever. Tech companies have done well. On the other hand, financials, which were like the leading segment of global financial markets for all this while, banks and NBFCs, that sector has been lagging a little bit. So it's interesting to see that within a span of about 6 months, financials from being the top segment across the world as a sector has been put on the back burner and has been overtaken by some other sectors in terms of leadership changing within the context of an up move in the markets, right? Now, some key questions that keep coming to us at all points of time in our mind is, are we in a bull market or are we in a bear market? As I said, it's extremely difficult to know at this point of time whether you're in a bull market or a bear market. It's always in hindsight that you realize that you were in a certain bull market or a bear market. But given the way the markets have reacted, it seems like a scenario where you're in a large multi-year bull market. And this is a very big correction within that market. Right now, we could be wrong. We might retest this theory over a period of time, depending on how prices seem to work. But it seems there is a pattern that these markets have followed. And usually, if the situation is really, really bad from the market's perspective, markets start retracing back at some point of time. Now, as we speak, they could retrace, but it just doesn't seem to be doing it as we till now. So let's see how that plays out. Now, with respect to this entire context, let's look at a few markets and try and understand what's really going on, right? Before we go there, let's look at the daily cases numbers. So there is no doubt that daily cases, these are global daily cases, that the trend is upwards. What you see as a blue line is a 7-day moving average. These charts have been taken from Wordometer, the website Wordometer, so you could get this information there. The cases now are nearly 3 lakh per day, approximately 3 lakh per day, and that has been the trend over the last week or 10 days basically now, right? There was a small dip in between, but there's sort of a weekly dip that happens and then it suddenly spikes again, right? That you see as a pattern playing out. But the blue line is more important. That's the 7-day moving average. That seems to be sloping upwards as yet. Unless that slopes downwards, your daily new cases continue to increase, right? Cases are primarily coming from US, Brazil, and India. These three countries put together are giving nearly 50 to 60% of the new cases at any given point of time. Obviously large populations, and so that's likely to kind of continue as well unless you find a way to stop it. Serious and critical cases, however, have started sort of, despite a reasonable jump in daily new cases. This is the cumulative number of serious cases. That's actually been stagnant since April end, right? That's where it probably kind of stagnated. Obviously, because there is a big jump in terms of the number of cases on a daily basis, that has gone up a little bit, but has again stagnated, right? So there is no real jump in terms of severity of cases that is playing out. And that's interesting, because then what it means is either the global system is sort of better prepared. I'll look at one more chart and then we'll get another sense around this. If you look at daily deaths number globally, right? Even there, if you look at the 7-day moving average, while the slope has started becoming positive, it seems like it is going up. It's still significantly below the earlier number. Now, just correlate this with this chart where your daily cases were touching about 100,000 or 1 lakh here, and your death numbers in the month of April were around 7,500 on 1 lakh new cases at any given point of time. You have lesser death numbers now with 3 times the daily cases coming in. So clearly the severity or the seriousness of cases has kind of been controlled. Now there could be variety of reasons for this. Uh, the word infrastructure could be better prepared. As it is spreading in countries, you could have a scenario where because you have a learning from some of the other countries, you're better prepared. It's spreading in younger populations now, so the fatality rates are lower now. That's possible. It's also possible that the virus has sort of mutated to a less deadly strain. There are some evidences around this that might have happened, which is suggesting that the virus itself has changed its nature a little bit. It's spreading more, but it is not as deadly as what the earlier strain of the virus was. Maybe a function of human immunity in certain set of countries coming up, that the countries now getting affected have probably better immunity embedded into that, especially emerging markets where it is spreading now. The death numbers are a little lesser than what the developed markets have seen. So there is a sort of hope that is playing out, that while total cases are jumping, you're not really seeing massive jump in death rates or fatalities, and that's a good indicator, in a sense that the markets are probably latching on to this information. If this is not going to jump, then you're likely to see the world economy opening up quickly, and consequently economic activity will pick up. Markets are basically forward looking, they're looking at it in that context, right? India specific data, the cases continue to rise, partly because we are testing more, partly because we are only opening the economy right now. There is no two ways to look at this data, that in terms of cases, we are definitely jumping now. And the trend also seems to be on the upward trajectory at this point of time. So we have to kind of look at that from a broader contour of how things pan out over the next few months. Having said that, I think no new news in this. It was expected to happen, and we'll be sort of clinging on to hope if we believe this is going to go away so quickly. We can't wish it away. It's there, and it's going to probably remain there for a while till the time we find a cure for it, right? So that's the backdrop of the virus around us. I think most governments and people have accepted that at least till the time you have a vaccine or a medicine kind of definitely working for it, you have to live with it and kind of consequently open up the economy, because that otherwise does a bigger damage to the overall proposition of your growth, right? Now let's look at what markets are doing, and I've put a host of charts here. So this is the S&P 500 5-year charts wherever possible. Somewhere else it might be slightly higher. I'll keep you posted whenever the chart range changes. So sort of dip in 2019 was okay, taken out, created a new high, went all the way down from nearly 3,400 levels to approximately 2,300 odd levels, and then has practically retraced back most of it, right? What fell in 1 month has basically been taken over in the next sort of 3 or 4 months. This is the US equities S&P 500 index. S&P 500 index for the US, that's SPX, right? DAX is the German index. Again, 5-year chart. You saw sort of, this was not as bullish as what US was, but nevertheless was trending upwards, had a sudden dip, and then practically again this was dipping from 13,900 kind of levels, went all the way down to less than 9,000, so 8,900 odd levels, and again touched back 13 sometime last week, right? So DAX is Germany. This is the German market that we are seeing, but that's not where the bulk of the interesting participation is. This is NASDAQ, right? The US tech index, basically, NASDAQ 100. This is on a tier away run. It's at an all-time high. It actually started 2020 somewhere here at 9,000. We are up year to date. We topped around less than 10,000, went all the way down to 7,000, and then crossed and is now at approximately 11,000 as we speak, right? So tech companies are doing remarkably well. That's clearly evident in this chart, right? What's moving them? If you look at most of the tech company charts over the last 1 year or so, look at Amazon. There was a dip in March, and then there is a big surge. This is Apple, dip in March, big surge. You have Google, which dipped in March, big surge, takes out the previous high. Facebook, practically every tech stock you pick will have a similar story to kind of talk about. In fact, even in India, to be honest, if you look at some of the tech company stocks, like if you look at the charts of Infosys, trading at all-time high. If you look at the chart of TCS, close to all-time high. So they've all recovered from what the dip was initially, and that sort of gives us a story that there is a change in the world order in terms of what's driving this further. What sectors are going to lead your next round of run, right? Let's look at some other charts. Let's look at Nifty. Sorry, so this I'll come back to later again. Nifty, again, similarish chart, big dip and reasonable revival. Right now, reasonable revival, not as good as some of the other segments, because we don't have in India similar stocks like an Amazon or a Facebook or a Apple that can lead the market significantly higher. So to that extent, this has been contributed dramatically by the likes of Reliance and the IT sector also kind of doing well. These two put together have about 30% weightage in the index, right? And that's basically one of the major reasons why our market seems to have done well. Look at banks though. So same time frame. If you go back here, you look at Nifty 12,400, 7,500 odd was the intraday move, and then it's about 11,000 odd today. But if you look at Bank Nifty, peaked around 32,000, dipped around to 16,000, has only gone back up to 21, 22,000 as of now. And that's not just an India story. So financials globally, XLF is an ETF of US financials, right? And if you look at the XLF chart, you see a similar pattern, goes down, but doesn't retrace even probably half of what the fall was, right? So if you look at European banks, if you look at US banks, if you look at Indian banks, there seems to be a bigger worry with respect to financials specifically. And that's basically because global growth stops. Growth stops creates a problem with credit growth. You will have NPAs kind of piling up, and all this information is only going to come after a point. It's not going to immediately arrive as NPAs. This NPA number is going to be visible in 2 quarters from now, right? Right now, we have given a moratorium to a lot of people. Right now, almost all governments have thrown money at the problem. So if you were servicing a loan, you're probably saved at this point of time. But what happens 3 months, 6 months down the line is something that remains to be seen. And that's why banking and financial sector globally is on a little bit of a tenterhooks at this point, right? Look at commodities. If you look at gold, there is a sort of a massive move that you've seen in gold post 2020. There was an initial dip when all asset classes were falling, and then it started spiking up significantly. All-time high on gold. I think gold is a better idea to look at gold on a longer time frame. So this is from 1998 till now. It did reach similarish levels somewhere in 2012, and before that in 2011, but then kind of created a move here, and then now has come up to a all-time high level. In Indian rupee terms, this is much higher, because when you convert a dollar price into rupee, around this point, India's rupee was at 55 rupees to a dollar. Now we are talking about 75 to a dollar. So when you multiply the dollar price, India's gold prices seem even higher from this perspective. So that's an interesting highlight. Gold usually rises. There are two ways to look at gold rising, right? Gold can be treated as a sort of a safe haven. You know, in times of crisis, gold is the asset class where people go to, and it could be looked at as a commodity as well, right? So if you believe that this entire printing of money is going to kind of create a scenario where the dollar is likely to go down, right? Because you're printing a lot of money, so the value of dollar should go down, and the value of anything denominated in dollar should go up with that respect, right? So that is possibly a theory why commodity prices seem to be going up as well. Look at silver, for example. Again, a slightly longish chart for silver. In 2011, it made a very big move, but in 2020, it's again started kind of spiking. And in fact, last few years, whatever the level was, it has kind of gone above those levels, right? You look at HG1, which is copper, and once again, you see that post-March, copper has started spiking up significantly, right? This is copper futures. So there may be some degree of difference between what the actual copper price versus future price would be, but almost all commodities kind of are indicating that you have a sort of a run that is going on in them, right? Now, you look at oil prices. Oil prices did this massive dip somewhere here, went almost sort of close to zero. This is the oil index basically. Futures went to negative numbers as well because they were getting settled on that day. But has again rebounded. Now, nowhere close to earlier levels, of course, 2018-19, but that's also because fundamentally, I think oil is a different story at play. Unlike some of the other commodities like gold, which people are buying because they believe the value of dollar might not remain where it is, and hence I want something denominated in dollars, which can save the value of my currency. In fact, if I go back to the gold chart and you look at gold prices in INR, it's a classic hedge against the rupee depreciation as well, against currency depreciation. So there seems to be a theory that is playing out that, you have a currency depreciation going on because everybody is printing currencies. And so consequently, real assets are something that are kind of going up significantly, right? Now, why is this happening is because global central bank asset purchases are kind of going through the roof. We have seen this earlier when we were discussing the monetary policy in one of our other sessions, that there's a massive sort of quantitative easing that has played out. Global central banks have put money into the markets by buying bonds, government bonds, sovereign bonds, then going to other quasi-sovereign bonds like municipal bonds, etc. And then in certain cases, even corporate bonds have been bought by the central banks to enable liquidity in the debt markets, and that has kept companies afloat, that has kept cost of money lower, and consequently all this money has found its way into various asset classes globally. If you look at broadly the interest rates regime around us, practically every country has cut rates in the last 4 months, right? And multiple times at that. Nearly 25 odd countries would be at a 25 odd countries would be at a 0% level. And a lot of the countries have basically kind of reduced rates, at least, even if they've not gone to zero, right? So to that extent, I think India, for example, has gone from 5.15 on the repo to 4.00. We've not yet used our entire ammunition because we believe that I think when the economy opens up, that's where things will require our response at that point of time, right? So that's this. So if you go to trading view and you put up the dollar index, you look at the dollar currency index kind of going down in the last few sort of days and months, right? And that's like it's a sort of a basket of the dollar rate against various currencies, and that's showing a dollar weakness. Uh, this is basically the emerging markets ETF, which basically is kind of going up. Now, you could actually create a scenario where you kind of compare them together. So this allows you to go to a full feature chart, and then you can basically combine the two. So we've put these together. Now, if you look at this closely, you will see a sense of when your emerging markets go up, the dollar kind of declines, then dollar goes up, emerging market declines. It's not a very, very clear relationship, but you could kind of get some part of that relationship evident in some of these charts that we are looking at. So that's something that you should kind of look at. It seems like globally there is a play on dollar weakness that is playing out. Now that doesn't mean it can't reverse itself. It can, but it seems like the commodities and emerging markets, the trade on risk on basically comes because of that. So when I say risk on, you're moving towards buying risk assets like commodities or emerging market stocks or stocks in general. And that seems to be coming from the fact that dollar is kind of headed a little bit lower, and that relationship seems to exist in that larger contour if you look at longer time frames. Not always, but most of the times, right? So although that DXY basket has a lot of it, dollar versus euro as the rate. So it doesn't give a very clear or clean picture, but it does give an indication that, whenever dollar sort of has a clear declining, trending move, you see the money chasing assets, which are like risk assets, right? And that's why emerging markets have kind of been going up. China stocks have been going up. Uh, Brazil stocks have been going up. India stocks have been going up. So you will see this kind of a trend. Now, what's next now? Right now, one of the key factors we know is low sort of interest rates and liquidity that is causing this. A new world order is also getting created with new sectors kind of coming up, tech basically benefiting, pharma benefiting, healthcare benefiting, but at the same time, financials not really encouraging. Right, money flow would create opportunities in various asset classes and countries. There are obviously other sort of angles going on. US is getting into an election, so they're kind of doing a lot of sort of money pumping into the economy. uh, China is trying to kind of take advantage of the situation. India is trying to take advantage of the situation. So there are a lot of things that are going on in terms of creating a new world order. Risk on trades are going on, so you have to be a little bit watchful in this scenario and careful in this scenario. Now I'll go back to one of the previous charts just to kind of understand when liquidity chases things, what can happen. You look, this is Nasdaq chart once again, and now stretched all the way back to the 90s as well. So if you look at the 90s, there was a point where Nasdaq was around 1000 in 1998, and between 1998 and 2001, the index itself went all the way up to 4,500. Right, this is the index level going up from 1 to 4.5. That's like 4.5 times. There were corrections which seem small corrections here. If you look at these corrections, they will appear small, but even this correction for that matter would be a 15 to 20% correction, right? Fast, violent correction. It takes it out and then just keeps going up, right? Now, that is not to say the same thing is going to get repeated, because this is where you had the dot-com boom, right? And the dot-com bubble got created. But the point with liquidity chasing asset classes significantly is that it does end up something like this unless you have sort of corrective measures that are there. Now, we don't know if it is a situation similar to 1998, 2001, 2000 kind of a scenario, Or if you want to look closely, you can go and look at India charts in 2006, where I think in the month of May, you had a sharp sort of 30 odd % correction. And almost in the next 4 months, we covered that up. So 2006 May till September, if you look at the charts of Sensex or Nifty, you will get this sense in India as well. So we don't know yet. But the point is that if you look at a global market where money is chasing a lot of these asset classes, you have to be a little bit careful on both directions. Basically, understand that if this is money chasing the markets, it could just keep going up and there's no stopping that. Understand that if the problem returns, you could see lower prices. And given that there is sort of a lot of retail interest, this is a different kind of a time, right, where everyone is sitting at home and a lot of retail traders have also got into the markets. So every sort of position is getting in skewed in that context. Lot of players are in the market, volumes have gone up on financial markets, and so you have to be a little bit watchful with both the directions. Don't sort of look at this. And now the one thing around the virus where a lot of the people are not very clear, or at least have this dissonance, is that virus cases are going up but markets should be going down, and they're still going up. Remember that virus news now seems priced in. When you were in February, the virus was a surprise, right? Nobody expected the world to shut down. If you were sitting on 1st of February, I don't think we would have thought that we'll have a shutdown for 4 or 5 months coming in, right? And this was never an event that was considered probable by stock markets or any markets for that matter. Now it is priced in. Now you know what can happen. Now you know what the worst is. You also know that the cases are large, but that's a news that we knew getting into the months of April and May, that the numbers are going to spike up, right? Unless the numbers now really become very large for us to handle, it seems that this news is priced in. But now on the other side, the solution to the virus is also apparently priced in, because every few days, if you have a company coming and announcing that there's a vaccine that is going to come and there's a drug that is going to work, then at some point of time the markets will start pricing it completely, right? So what is the end game here? Nobody really knows what the end game is, but it seems to be you need to look at the markets and make a sense of them in that context. It is entirely possible. So there is one possibility that we see, which is that the markets sort of spike up and then you eventually get a solution to the virus, and then the markets realize, okay, now reality sinks in. So everything priced in, markets always lead the situation, markets go up and then they start kind of correcting. This could take a lot of time. This could take 6 months, this could take 12 months, this could take a market up move of 20 to 30%, maybe more, who knows, right? That's one possibility. There's another possibility that we return back to reality much earlier, where we realize that economic activity is just not picking up. Right now the assumption is that economic activity is going to pick up. I can also mathematically show you, right? If you were to do an NPV of a company's cash flows, we do this DCF, right? So you have cash flow 1, you have cash flow 2, you have cash flow going up to the nth here. In case of a terminal model, you could have till infinity. Right now you discount all of these, right, to get to the present value. How much value does one particular cash flow give to the entire company's NPV? If that value is less than 10%, then practically just write off 1 year, right? So one way of looking at this entire economic activity is just write off this year. Right now, I realize that that's not such a simplistic scenario. Things could obviously, there are some things which are not reversible in this period, but for a specific company, it could just be writing off 1 year, right? And so for an auto company, it could just be writing off 1 year, and then they go back to the previous trajectory. Too early to say that, but it also seems possible that the market could be pricing in something like that, where the economic activity comes. However, if the economic activity does not pick up, it keeps going down or stays stagnant, that's when you could have a reality check that could come in. So I wouldn't hazard a guess at this point of time as to where we are headed, what's happening, but just remain watchful, because what you're going to see is an extremely volatile environment with massive moves either direction on the markets going to continue for a while. So just keep that in mind, that we're not out of the woods yet, but this could seriously give upside fillip if things start sort of opening up, and the liquidity doesn't go out of the markets, which doesn't look likely the case, right? So that's broadly it with respect to what's happening in the markets, what's happening right now with the global markets and the virus cases. That's broadly it from me today.